Let's do some journal entries. Laura Company, that's my wife. She's really good looking. She's a really good cook. She's young. She'll always be young. She's 11 years younger than me, so she's still young. She'll always be young. This is a rock. She says, no, I'm getting old. No, you're not. Compared to me. Anyway, and she's married to me. Isn't that amazing? I don't get it either. She's amazing. You dislike me that much already? You're going to move to the back? You smile. Sorry. Are you learning everything so far? Yeah. I don't know. We'll find out. Yeah. No pressure. No pressure. All right, let's do this. Owners borrowed $4,000 cash to start the business. And because you're a courageous young woman and you sat in the front, you get to do that journal entry. And what we're going to do is we're going to write down a debit, and we're going to put it on, guess which side we're going to put the debits on? Left. All right. And then we're going to put both the name and the dollar amount, okay? We're going to put it on the left. We're going to write our first journal entry, okay? And then we're also going to do a credit, huh? Because there's an exchange here. We got something, we gave something else. This is our first journal entry we'll do in classes, okay? But you've been doing it in your homework. They're not a big deal. Oh, no, you haven't been doing journal entries. They didn't ask you to do them, huh? On the quiz, I'm going to have to do journal entries. As you do the homework, I should have told you that. As you do the homework, just do journal entries. All that stuff of increasing and decreasing and plus and minus, nah. Let's do debits and credits. Everybody uses debits and credits. So we just go straight to that. That's why I wanted you to read the first 3 chapters, because in chapter 3, they're all journal entries, aren't they? Yeah, okay, so let's just do journal entries. So here we go. We're going to debit something and credit something. Can you tell me what we should probably debit here? Owners borrowed $4,000 cash to start the business, and I'll help you through it a bit because you're the first guinea pig, okay? What did the company get? $4,000 of cash. So we got $4,000 and cash. We're going to name it cash because it is, and it's $4,000. So we're going to write that down because it's $4,000. And we want to put that on our balance sheet because we got it, right? So what is this? Is this an asset, liability, equity, revenue, expense? Everything's one of those. What is it? Asset, and you have what? More or less cash if you got it. More. So what do you want to do to cash? Debit it. Why? Because assets are on the left. Not just cash is on the left, but all assets are on the left, right? So as soon as you know it's an asset and you have more, you know it's a debit. So what you're going to do is you are going to debit. Don't do that. You are going to debit. There it goes. You are going to debit cash. How much, guys? $4,000. We are brilliant people, okay? And now you know you need a total credit of $4,000. There's only going to be one, so I'll go ahead and write it down. But it could be more accounts, right? Just so the total of the debits equals the total of the credits. What do you want to credit? Oh, well, they borrowed the money. You think that is? Maybe a bank loan. I bet you had to go to the bank to get $4,000. So maybe a bank loan, right? Or a note. Sign a note for it, right? A note payable, which is a liability. And do you have more or less liability if you borrow money? You have more. Guess what? You have more of a liability, and liabilities are increased with a credit. That's it. So what do you want to credit? She liked it. Not accounts payable. Somebody say that? Notes payable. We'd sign a note for this one. So note payable or bank loan payable or bank note payable. Company can call it whatever they want. It's real flexible. But notes payable is good. We'd actually sign a note, right, guys? Account payable would just be open account. They just trust me for it. I don't think the bank will give you $4,000 and just trust you. They'll make you sign papers, guys. Okay, and we're done with that one. You get points. This is 8 points. That's probably a half point for each part of that. That might be a point there. Big deal. Okay? What did you get? What did you give up? What did I get? Cash, an asset. What did I give up? My promise to pay them later. Yes?
I know it matters, like where the money goes on the debit or credit side, but do we have to indent the notes payable?
Yes. Yeah. Very good question. I want to debit cash, so I show both the name and the amount on the left. And then I show both the name and the account of the credit on the right. Both the name and the dollar amount. Got it? Don't line up any of it. If you line all this up, I'll give you half the credit. I'll assume they're all debits or all credits. I don't know what you're doing. Okay? So don't make things straight down the page. Separate them like that, debits and credits. And you don't have to be perfect.
Maybe like a T.
I would not use a T account if it asked for journal entries. That's a journal entry. If I tell you to use T accounts, use T accounts fast. Okay? All right, so good question there too. All right, good. All right, so then the owners invested land worth $10,000 in the business in exchange for stock. The young woman way in the back. What did the company get? Really? The company got stock? Oh, you got to separate the owners from the business. So this is tough, right? It's not what the owners got. We're not doing the owner's accounting here. We're doing the business's accounting. Okay? So let's go again. Try again. Owners invested land. By the way, if I put you on the spot and you feel pressure, that's good. I hope that happens in your career every day. It'll mean you're the boss. The boss has the pressure game. Employees feel pressure. The boss really does. Guess what? Anything that goes right when you're a manager, you need to give your employees credit for that. You're getting the money. Give them the credit for what they accomplish. Right? Anything that goes wrong, it's your fault. Whether you touched it or not. You hired them, you supervised them, you trained them, it is your fault if it goes bad. Everybody got it? You will be a successful manager if you follow that. Your employees will love you. No matter how mean you are to them, they'll love you. If you don't know how to do this when this course is over, it's not your fault, it's mine. Now, when you do it, you'll think it's your fault, right? When I do it, it's not. Okay, my responsibility. Always do that. Okay, really pays off. You'll be far more successful. Now I give you all kinds of time to think about that. Go. Of owners invested land worth $10,000. It wasn't cash, it was land, right? So the company got land of $10,000 in exchange for stock. And what does the stock represent? Contributed capital, common stock. It represents ownership, doesn't it? So the company got what? An asset named land. What are you going to do to the land, you guys? It's an asset, and you have more. Debit it. Yeah, put it on the left. Debit it. Okay? That's debit. We don't say put it on the left, put it on the right. We say debit it. Okay? But that is putting it on the left. Yeah.
Okay, so for the next step, how do we know? Do you not do like common stock on this one because it doesn't factor?
Well, it would be common stock probably if nobody told you otherwise. The authors are trying to get you a little tiny bit at a time, so I'll take contributed capital. Contributed capital.
So
Common stock is a type of contributed capital. What's that?
Okay.
Yeah, to the other side of it. So yeah, what I've got is I have more of an asset, so I'm going to debit it, and then I have more equity directly, right? It's owner's contribution. It's that contributed capital we talked about, right, guys?
So for when you write it down, like you would write like land and then 10,000, but like could you also put like investment 10,000?
No.
It would have to be.
Not investment. Investment. She says, could I instead of debiting land for 10,000, could I debit investment for 10,000? No, because investment would be investing in another company. Oh, company didn't get an investment in another company. They got land. They got land. It's on the ground. Ah, that's the asset they got. The owners could have invested cash too, but the company would have gotten cash, not investment. The owners could have invested a piece of equipment, but they would have equipment, right? It's what the company got, not what the owners got. The owners, if you were doing their account, they debited themselves. Okay? Which side of the deal are we on? Okay, so we're going to debit land, and what do you want to credit? What do you want to credit? An account named contributed capital is okay. We could use contributed capital or common stock. If I told you that they issued stock, you could use common stock, or you could use contributed capital. At this point, I'll take either one, okay? That'd be fine. Later, it'll have to be common stock or preferred stock, whatever kind of stock it is. Okay, good. Okay, so the next one. You want to do the next one here?
So we got equipment for 900.
So you can just do that if you want. They got equipment. What's equipment? I think it's an asset too. Yeah, trucks, trucks, I don't know, forklifts, front loaders, equipment, yeah, okay. So they got equipment. Okay, so it's an asset. They have more or less that they got. More. So what do you want to do? And what do you want to name it, seeing as it's equipment? How about calling it equipment? We're clever people, aren't we? Okay, so we call it equipment. And you can abbreviate as long as I can tell what your abbreviation means. Be careful. Don't use INV for inventory and investment, both in the same quiz. I don't know what you're talking about. Okay, so yeah. So equipment, we're going to debit for, how much was it? 900 they got? Now this is a tougher one. You got a 3-part journal entry here. What'd they give up? Yeah, 100 down. 100 of what down? Yeah, cash. We give a down payment of 100. Cash is a what? And you have more or less if you gave it to them. Less. So what do you do to it? Credit it, because that's how we reduce assets. Excellent. Is everybody staying with us? This just isn't a big deal if you let yourself think. Think about it, figure it out, don't try to remember it. Too much to remember. Stop remembering. You Catholic school kids, right? Okay? Stop remembering, right? What do you have to remember in here? Left means debit, and assets go on the left. You don't have to remember the right, you can figure it out. Don't waste your energy. 2 things to remember. Everything else figure out. If you can discipline yourself to do that, oh geez, I'm trying to remember this. Stop it. Right? Figure it out. Okay, what happened? Well, that journal entry doesn't balance. I need another 800. What is it? They signed a note for the remainder. A note what? Payable, right? Which is a liability, and you have more or less if you owe people another 800. You have more, and how do you increase the liability seeing as they're on the right? With a credit. This is too easy to believe. Note payable. Can you guys do this? Do the next one yourself. Write down on a piece of paper right in front of you. Everybody do it. Purchase supplies for $300 on account. That means they are going to trust you to pay them later without you signing a note. On account. So what did you get? Write it down. What did you give up? Write it down. Make sure your debit equals your credit. Everybody write it down. Write down a little entry, just a little scrap of paper. Do it. It's too easy. Shit, it's too easy. You see it. Does your head working this way? Even I can do it. Just think about that. Every time you're having trouble learning this stuff, the kid can do it. Come on. I'm smarter than that guy. That's easy. And students always tell me they've been doing it for years and years and years. That's true, but I don't have any brain cells left, and I can still do it. So, pretty good. I can't tell my granddaughters apart. They're twins. God, I really can't tell them apart. And they're 4, and now they get to be real smart asses. They lie and tell me they're the other one already. I figured it out after a while. They're equally as mean to me, though. So, smart asses. I had no idea grandchildren cost this much money either. I'm still working.
Can you repeat what you said on account?
Oh, no, I did it once. Jeez. You look fairly intelligent. Okay, look. On account means they're going to trust you. On open account. When I sell something to somebody on account, it's on open account, I'm going to trust them to pay me without signing a note. Okay. When I buy something from somebody, they're going to trust me to pay them on open account. So it is an account what if I bought this and I'm going to pay them later? Payable. Yeah, you got it. How about if I'm selling something to my customer and it's on open account? What do I have? An account receivable. Okay, account payable is what kind of an account? Liability. How do you increase it? Credit, how do you reduce it? Debit, why? Because liability is on the right. Okay, accounts receivable is an asset, isn't it? How would you increase it? Debit, how would you reduce it? Credit, yay! We're there, aren't we? Okay? Did that answer it? God, that was a stupid question. No, I'm kidding. Are there stupid questions? Of course there are. But asking about something you don't already know is not a stupid question. Asking the same question 10 times in the same day gets you fired. And I think that's stupid. When you go to work, you make a list of questions. You ask the question once, and you write down the answer, and you never ask that one again. And you will be far more successful. I used to drive people nuts. I was working as financial vice president, the CEO, the president would only show up once a day for a while. It was way at the end of the day, really late. And he'd show up. Some days I'd have 3 legal pad, I'd have 3 pages of questions written for him. I'd say, oh God, geez, I'd say, I'll get you a beer, Larry. And I'd go, we had really nice beer in the refrigerator. It was great. He had this really nice office. I used to, it was over a lake, the land developer. And it was over a lake, and we had a deck. We'd go sit out on the deck, and we'd drink Heineken or something, and whatever we had in the refrigerator. And everybody's gone but him and me. And we'd sit there, and we'd listen to music of people having fun across at the restaurant on the other side. Oh, that's right, I was getting paid a lot of money. Anyway, and I was drinking good beer. And we'd go down through that list of questions. And he loved it. I didn't call him up when I had a question. He'd say, man, it's busy. So remember that. Okay, you make a list, you ask them, you write down the answers, and you move on, right? Don't ask the same one again. So, I did what? Oh, I'm 16. Oh, thank you. I recorded that nonsense? Who would want to listen to that? No. Anyway, you didn't want to listen to it the first time, did you? The neat thing on this is you can fast forward, guys. If you do go back and listen to any of this stuff, okay, why would you do that? Did it the first time, don't listen to it again. I don't think I ever would. But some people like to, though. I do have to tell you this one. When I was doing my PhD program, and my son was living, I was divorced, and my son was living in Tacoma, Washington, and I was going to school at Eugene, at the University of Oregon. And it's like a, 5-hour drive, something like that. And so I'd drive back and forth every weekend, right, to see him and to pick him up and stuff. And but anyway, we're traveling back and forth all the time. Well, when he wasn't in the car with me, I would listen to lectures I had recorded on cassette tapes back in those days, and I would listen to these boring lectures from my faculty members. It was like this stuff, only it was real technical stuff. And so well, this is true, I guess. But anyway, I'd be listening to this stuff, and then I'd realize I hadn't been listening for about an hour, and have to rewind and start again. Yeah, it's kind of like that. But maybe I got it. I really do think, though, maybe you could take this, and you could play it while you're sleeping. On a real low, have it play under your pillow or something, and maybe it might work. No, maybe not. Yeah. But I do think that you could put your book under your pillow and sleep on it, and that would help. Right? A lot of students, that's their strategy. Yeah, use that. Okay, anyway, so let's do this one. Purchase supplies for 300 account. What did you guys write down? What did you get? Supplies. And please don't just call it supplies. I know the author does, but call it supplies inventory. Let's use the word inventory. Supplies inventory. Inventories are things that I have on hand that I'm going to use or I'm going to sell to somebody. Supplies inventory I'm going to use. Merchandise inventory I'm going to sell to somebody. Put the word inventory on it. And here's the reason. What does supplies mean? Okay, I'll shut it off. We're at 25. What does supplies mean? But thanks for reminding me. What does supplies mean? Let's see. There is supplies inventory. That is a what? Asset, liability, equity, what? That's an asset. There's supplies expense. What's that? Obviously, if you put the word expense on it. That's an expense account. Everybody agree with that? Okay, there's supplies payable. What do you think that might be? You can have that account if you want. What would that be? Liability. That's supplies I bought and didn't pay for yet. Okay? Could have a liability. So I've got an asset and expense. Getting the idea? I've got a liability. You know what? If I sell supplies, I might call it supplies what? Revenue. Okay? Supplies revenue. I heard supplies receivable too. We could have that one too. That would be a weird one. We could really call it accounts receivable, but it makes the point, right? It really be called accounts receivable then. But what's the deal? I sell the supplies and I have supplies revenue. That's a revenue account. All right? Okay, this is another asset account. So what does supplies mean exactly? That it has something to do with supplies. It doesn't tell you that it's inventory unless you put the word inventory in it. You got the idea? Let's use the word rent. Could I have rent receivable? I have tenants and they haven't paid me yet. Can I have rent revenue? Sure, I earned the rent. Could I have rent payable? Yeah, I'm renting property and I haven't paid for it yet. Could I have rent expense? Sure, I'm renting the property and I used it up. That's when I have the expense, when I used it up. Are you getting the idea? Oh, I paid prepaid rent. I paid for the rent in advance. That's another asset. I could have unearned rent. They paid me, right? And now I have a liability. I owe them the use of the facility, the building. Oh, man, and we're going to have all those things. What does rent mean? It has something to do with rent. I got to do that one other account, one other name to it, and what have you done? You've established whether it's an asset, liability, equity, revenue, expense. Everybody good? Question?
A prepaid account is always an asset, right, until it gets used.
Yeah, prepaid is an asset until you use it up. Okay. And the other side of that would be an unearned revenue account until I've earned it. And we'll get to that. Okay, that's chapter 4. Okay, we'll get to that. So yeah, sure. Okay, we'll be able to handle that stuff. But you know what? If you know that a prepaid is an asset, how do you increase it? With a debit. How do you use it? With a credit. Unearned, by the way, unearned revenues, they're liabilities. I owe them the goods or services, right? Whatever I sold them, right? I owe them the goods or services. I have the obligation to give it to them. It's a liability. How do you increase it? It's a liability, you guys, with a credit. How do you reduce it? With a debit. Get it? So each time we add an account, what do? What is it? What are the possibilities? It's liable. Good, huh? You like it? Okay, so anyway, so what we've got going here is we're crediting supplies, or debiting supplies inventory. What do you want to credit? What did I give them? My promise to pay, which is called accounts payable, and I'm putting it over here on the right because it is a credit, because it is a liability, and I am doing what's the liability? Increasing. This is easy, right guys? Does it feel easy? And you just let yourself concentrate on what? What are we doing? What did I get? What did I receive? What did I give up? That's the exchange. How much was it? Dollar amount, right? And what do I name it? Right? And are they assets, liabilities, equity, revenue, expense? That's the whole story, right? What do I want to know first? What did I get? What did I give up? How much? Huh? And then what do I want to know? Is it an asset, liability, equity, revenue, expense? And once I know that, I know how to record it. You don't remember how to do journal entries. You don't. There are billions of possibilities for journal entries. How big are your brains, you guys? Can't do it, can we? But can you figure it out? Sure. That's good. Okay, what's an asset again? What do you think an asset is?
Debit.
Yeah, but what is it? What's an asset?
Asset something.
We increase it with debits, reduce it with credits, yes. I don't know that. What are they? What are they? Something you don't own it necessarily. Own would imply ownership. That's the equity. So let's not go quite there. But it's something you have, you possess. All your possessions are your assets, right? It's under your control. And yes, you own it. The legal sense. Yes, you do. Okay, I own my house. Not really. The bank owns most of it, right? But they don't think they think I own it, right? I'm going to pay for it. It's my house. But I don't have equity equal to the house, do I? Right? That makes sense? You might have a situation here with your house. You know, my wife and I paid $170,000 for our house. I like money in the stock market, not houses. Anyway, so we had a little tiny bungalow. Paid $170,000 for our house about 8 years ago. Still worth that much, probably. $170,000 for the house, right? This is $170,000. You put almost nothing down on it because the money's in the stock market, the steady, the interest rate's nice and low. So this is probably $160,000, I don't know. And this is debt. What do you think? Actually, this is probably $170,000. Okay, but what's the deal? This plus this has to equal that one. The liabilities plus equity has to equal your asset. And if I own $60,000 of the house and the bank owns $110,000 of the house, that's what I'm representing in my balance sheet, huh? Showing my ownership share in equity. I'm showing how much I owe the bank and the liabilities, and I'm showing the total asset that I have control over, right, as my assets. Everybody getting the idea of this thing? Good job. Okay. What do you think a liability is? You have an obligation to owe, right? What do you think equity is?
Something you own.
Representation of your ownership of your wealth. What are the two types of equity we have? Two basic categories of equity. No, those are subsets of equity on the income statement, but that's not that. That's how we get our income. But the two types of equity I did earlier today. The two types of equity. Your parents contributed to you, right? And your grandparents, which would be called imputed capital, so common stock, preferred stock in the company. And what's the other type? You earned money yourself and you kept it, right? You increase your wealth by earning, right? Retain your, if you will. Okay, what's revenue? Yeah, well, an asset are your possessions, right? Yeah. Liability is everything you owe. Yeah. Equity is the representation of your wealth. What's revenue?
It's basically the representation of capital operations.
Okay, operating the business this period, right? This year. Revenues are the result, representation of the increase in wealth due to earning, right? This year. You might have rent revenue, you might have interest revenue, you might have sales revenue. Getting the idea? Sales is selling product or services or something. Okay? What are expenses? Yeah, but that would imply cash. Be careful. You know, I think of spend, it's cash. It's costs. It's what I used up. Whether I pay for it or not doesn't make any difference, by the way. I might pay for it in advance, that'd be a prepaid. I might pay for it later and have an accounts payable. We already did one of those, right? Okay, or I might pay for it at the same time, that'd be a cash transaction. So we're going to separate the cash flow from incurring expenses or earning revenues. Okay, we'll do that real soon. Okay, so it's incurring a cost to generate what? Yeah, right? It's cost we incur to generate revenue. You guys have jobs? Your employers have you there because they love you and they want to give you money, just for the hell of it. No. You're an expense they are incurring, and what are you supposed to be doing? You generate more revenues than your expense. My rule of thumb is 3. I like to have 3 times the revenue going into my employer that I cost as a result of me being there. If I can pull that off on a continuous basis, I continuously get raises because they don't want you to leave. So don't say, oh gee, they don't give me everything I earned for the company. Great, you're not taking any risk, they are. Right? So you can drive your salary up by earning more and more revenue for the outfit. Right? If you're a marketing person, that's exactly what you do. You go into sales. They pay you based on what you sell, don't they? Directly. You can make a lot of money if you're good at selling stuff. Okay? So expenses are costs we incurred to generate our revenues. Everybody got it? No, so they are. Okay? Now the authors talk about all this stuff, haven't they? But they talk about it in such theoretical terms and you're reading definitions and stuff, it's not real. Is it real now? That's what you got to do. When you read this stuff, make it real somehow. Associate it with your life. What do? Every single one of you people have been to, I bet, Walmart or McDonald's, right? You've been to these places, Kroger. Business is being transacted. You're doing it. You know what transaction business is. Just think about what's happening here. And then all we're doing is we're writing it down. And we write down every single thing that happens. That's what these entries are doing. Imagine at Young Brands how many transactions they have, how many exchanges they have. Oh my gosh. McDonald's. Any big company. Even small companies. Thousands of transactions. We write them all down, we add them all up. We really like computers, huh? Because they do it automatically. When you go to Kroger and they scan your green beans, I know you guys buy cans of green beans, right? But anyway, when they scan your green beans, huh? It is automatically recording the sale, and it's recording the expense, the cost of goods sold. And oh, by the way, the computer is going to schedule reorder green beans for them. We get it all computerized, but we're still doing it like we did it when we did it by hand, right? We have the computer doing it for us, and it just adds them all up for us, okay? But knowing what's happening there is tougher now. We did it by hand, it was easier because you could see what was happening. Now it just happens, right? And these numbers come out in a balance sheet or an income statement, and you've got to be able to tell if the balance sheet and income statement is right. With millions of transactions. Got the idea? That's where we want to go. Okay? Good. Did I fish you off being mean to you?
What?
I did hurt. Did I fish you off too?
No.
Did I get angry?
No.
Okay. Trying. Okay. Doing my best. All right. Good.
You went over your 25 minutes.
Oh, I'm way over. All right. Let's stop it. These would be really